Good morning.
Good morning, sir.
Okay. So this morning we are going to look at public sector audit. So permit me this morning, I'm going to spend 1 hour. 1 hour. So I have an important assignment to attend to from 9 o'clock. So I will just spend 1 hour. So, but um, once we enter the month of October, starting from next week, we'll be holding lecture Friday and Saturday. PSAF lecture, we'll be holding it Friday. We'll also be holding it on Saturday so that we can cover on time. So we'll be holding the lecture on Friday night. We will just spend 1 hour, and every Saturday we spend 2 hours, starting from next week, like we did yesterday. So this morning, we want to look at public sector audits. So we start with what is an audit. Audit, we know the audit. Audit is a process carried out by who? Qualified accountants, during which accounting record and financial statement of an organization is subjected to examination by an independent auditor. Audit simply means review of account, review of record, examination of financial statement carried out by an appointed auditor in compliance with terms of appointment. So when we talk about audit, we are talking about an engagement that is governed by statutory, is compulsory. When you are verifying, you are investigating financial statement of an organization in order to express opinion as to either the financial statement is of true and fair view. So that is meaning of audits. Now, what is the objective of audit? This topic we are talking about is public sector audit. How do we audit government accounts? But before we start with government account, we have to look at audit in general. So that is the reason why we start from what is an audit. So second part now, objective of an audit. Why do we carry out audits? Number one, objective of an audit, completeness, to ensure that all transactions in a relevant year have been recorded, to ensure that all transactions in a relevant year have been recorded. That is completeness. Another one, occurrence, to ensure that all transactions properly occur. All recorded transactions properly occur and were relevant to the year of account. That means all the recorded transactions, we want to verify whether those recorded transactions actually occurred. So whether we actually make the payment to the third party, whether we actually purchase the fixed assets, and so on like that. That is one of the objectives of audit. Another one, measurement, to ensure that all the transactions at the end of the year, they are properly valued, they are measured, they are valued in line with established accounting policies. All the transactions at the end of the year, they are properly measured, valued in line with the established accounting policy. So that is another objective of an audit. Another objective of an audit is called regularity, to ensure that all transactions, all recorded transactions are comply or are in accordance with primary and secondary legislation, to ensure that all recorded transactions are in accordance with primary and secondary legislation. So that is another objective of public sector, another objective of an audit based on public sector. We have another one, disclosure, to ensure that all the recorded transactions have been properly classified and disclosed where appropriate. To ensure that all the recorded transactions have been properly classified and disclosed where appropriate. So these are the objectives of an audit under this public sector audit. Number one is completeness. Number two is occurrency. Number three is measurement. Number four is regularity. While number five is disclosure. Now, the next thing we need to look at is factor contributing to an effective audit. What are the factors contributing to an effective audit? What factor will contribute to an effective audit? One of the factors contributing to an effective audit is called independent of the auditor. Independent of the auditor. If the auditor is independent, we are going to have effective audit. When we have auditor that is independent, we are going to have effective audit. Once we have an auditor that is independent, we will have an effective audit. Another factor contributing to an effective audit is called the adequacy and scope of the auditor power. The scope given to the auditor will determine whether the audit will be effective or not. The auditor scope is going to determine whether the audit will be effective or not. The scope of the auditor power will determine whether the audit is effective or not. Another one, the expertise and professionalism of the auditors. The expertise and professional, the level of experience, the level of training, the skills possessed by the auditor will also contribute whether the audit will be effective or is not effective. So for an audit to be effective, the auditor must have an experience. He must be trained. He must possess the relevant skills for the job. Another factor contributing to an effective audit, freedom of reporting. Freedom of what? Reporting. The freedom of reporting means the when the auditor want to prepare his report, the auditor is given free will to report. The auditor is not comply. The auditor is not influence. The auditor is not control. So freedom of reporting also contribute to an effective audit. Another one, unrestricted access. Unrestricted access. Unrestricted access to record. When you did not restrict auditor to have access to record, when auditor is free to review the document, when you give auditor all the necessary document, all the necessary information, you do not restrict him from getting some document. You give him free will to do his job. So all what is needed, all the document needed, all the file needed is being given to the auditor. So once auditor get all those supporting documents, it's going to have impact on the audit. We are going to have effective audits. Another factor contributing to an effective audit is called stakeholder support. The support of the stakeholder. Who is the stakeholder? Those who the auditor is auditing. The company, the employees, the managing directors, the CFO. They need to support. They need to work hand in hand with the auditors. So they need to give the auditor support. Once they give the auditor support, auditor will have effective audits. So stakeholder support will also contribute to an effective audit. Now, what are the legal and regulatory framework of public sector audit? What are the legal and regulatory framework? We call it legal, statutory, and regulatory framework of public sector audit. That means what are the law that we need to follow while auditing government accounts. If you want to audit ministry account, if you want to audit government agency account, what are the law that you need to follow? What are the regulations that you need to follow? So that is legal and statutory framework of public sector audit. One of them is Nigeria Constitution of 1999 as amended. Nigeria Constitution of 1999 as amended. This is one of the law that we follow for while doing public sector audit. The Nigeria Constitution of 1999 will help us so we follow this law while doing public sector audit. Under the Nigeria Constitution of 1999, we talk about how do we remove fund from the consolidated revenue fund. It's stated in the Constitution. The responsibility, the duties, the appointment, the removal of Auditor General is also stated in the Constitution. So the Nigeria Constitution of 1999 contribute to an effective, is one of the legal and statutory framework of public sector audits. Another legal and statutory framework of public sector audit is called Audit Ordinance Act. Audit Ordinance Act of 1956. Audit Ordinance Act of 1956 is also one of the legal and statutory framework of public sector audit. In this Audit Ordinance Act of 1956, it's talking about if you want to do audit in public sector, what are the areas you need to audit? What are the areas you need to audit in public sectors? So, and how does auditor prepare the audited financial statements? So what is the responsibility of auditor? What is the timeline for the auditor to prepare the financial statement and submit it to the Public Account Committee? All these have been stated in the Audit Ordinance Act of 1956. We have another one called Finance Control and Management Act of 1958. Finance Control and Management Act of 1958. Finance Control and Management Act of 1958. This one is talking about the responsibility for the preparation of financial statement. Who is responsible for preparation of government financial statement? That is the responsibility of Accountant General. Accountant General will prepare the government financial statement and is going to submit it to the Auditor General within 90 days after the end of the year. So once Auditor General receive the audited the financial statement, Auditor General will now review the audited financial statement. He's going to submit his audit report to the Public Account Committee. Under this Finance Control and Management Act, he's talking about how do we authorize money from government consolidated revenue fund. So what do we use to authorize payment from government revenue fund, from government consolidated revenue fund? One of the way by which ministers is empowered to authorize payment from the consolidated revenue fund is through the use of warrants. Warrant is an instruction given by the Minister of Finance to the Accountant General to authorize payment from consolidated revenue fund. Another one is Fiscal Responsibility Act 2007. Fiscal Responsibility Act 2007 is also one of the statutory framework of public sector audit. In this Fiscal Responsibility Act 2007, we'll be looking at How do we prepare government budgets? All the government expenditure, all the government spending must be in line with budget. This Fiscal Responsibility Act guide against reckless spending in the public funds. Fiscal Responsibility Act guide against reckless spending in the public fund. It does not allow reckless spending in the public fund, reckless in the management of public fund. So that means we have to prepare budget. It is from the budget we incur expenses. It is from the budget we make capital expenditures. So this is one of the legal and statutory framework of public sector audit. Another one, Public Procurement Act 2007. This Public Procurement Act 2007 too is talking about transparency, accountability in procurement of goods and services in the public sector. Transparency, accountability in the procurement of goods and services in where? In the public sector. That is Public Procurement Act 2007. We have another one called Financial Circular. Financial Circular. Financial Circular or Treasury Circular is a memo issued from the Accountant General Office or from the Ministry of Finance. So sent to all the ministry, agency, parastatal, guiding them on how they need to prepare their financial statement, on how they need to incur expenses from time to time. So all these are the legal and statutory framework of public sector audits. Another area we need to look at in this public sector audit is, let's look at benefit of audit planning. Benefit of what? Audit planning. Before we look at the benefit of audit planning, what is planning? We have to plan. We have to establish an objective. We have to establish a rule. We have to establish a standard. So audit planning means before we start an audit, we have to plan for the audit. We have to make some arrangement. We have to put some control in place. So in this audit planning, one of the benefits of audit planning is it helps auditor to divert appropriate attention to the important area of audit. It helps auditor to divert appropriate attention to important areas of audit. So another benefit of audit planning is it helps auditor to identify and resolve potential problems on a timely basis. It helps auditor to identify and resolve potential problems on a timely basis. So it's one of the benefits of audit planning. Audit planning also helps auditor to properly organize, manage the audits. Audit planning also helps auditor to properly organize, manage the audits so that it performs in an effective and efficient manner. Audit planning also helps auditor to properly organize, manage the audits so that the audit perform in an effective and efficient manners. Audit planning facilitates direction, supervision of engagement team. Audit planning facilitates direction and supervision of engagement team. Audit planning assists where applicable. Audit planning will assist where applicable in coordination of work done by the auditor and the experts. So these are the benefits of audit planning. Now, type of public sector audits. What are the type of public sector audits we have? Type of public sector audits. What are the type of public sector audit we have? One of the type of public sector audit we have is called compliance audit. Compliance what? Audit. What is compliance audit? Compliance audit is an audit with specific. This compliance audit organization comply with the relevant legislation, relevant standard, relevant law. So compliance audit is carried out to review the level of an organization in terms of compliance with standard, legislation, and other law. So that is what compliance audit deal with. So it is an audit carried out to ensure that whether we comply with the law or standard specified in an organization. We have another one called financial audit. We have another one called financial audit. What is financial audit? Financial audit is an audit that is used to determine whether the entity financial information is presented with applicable financial reporting and regulatory framework. This financial audit is carried out to determine whether the company, whether the public sector organization comply with the standard. What are the standards that govern public sector audit, public sector accounting? PSAF. In this financial audit, the auditor will use the financial audit to establish whether the financial statement prepared by the public sector is in line with the relevant international public sector accounting standard. And this financial audit we also use to determine whether there is no material misstatement or errors that may have material impact in the financial statements. Is used to determine whether there is no material misstatements or errors that will have financial effect, that will have material effect in the financial statements. That is what financial audits have to deal with. We have another type of audit called value for money audit, VFM audit. What is value for money audit? VFM audit. What do you understand by value for money audit? Value for money audit is an audit that is based on 3 E's. What are the 3 E's? Efficiency, effectiveness, and economy. Value for money audit is an audit that is based on 3 E's: efficiency, effectiveness, and what? Economy. So this value for money audit, it is carried out to ensure that maximum benefit is realized from the utilization of scarce resources. Value for money audit is carried out to ensure that maximum benefit is realized from the utilization of scarce resources. And while carrying out value for money audits, we make use of 3 elements. One of them is called efficiency. Second one is called effectiveness, while the third one is called economy. So value for money audit is the review of financial transaction of an organization to confirm whether the organization has received adequate benefits. The review of financial statements or financial transaction of the organization to confirm whether the organization has received adequate benefit for the money expended. So this value for money audit has three components. This value for money audit has what? Three components. What are the components of this value for money audit? One of the components is called economy, while second one is called efficiency. The third one is called effectiveness. So these are the three major components of value for money audit. These are the three major components of value for money audit. Now, what is economy? Economy has to do with government spending. Economy has to do with government spending. That means when we are spending when government spend money, the benefits from spending the money should outweigh the expenses. Do you understand? So what economy simply means, it means the process of acquiring resources, government resources, at the least possible cost. The process of acquiring government resources at the least what? Possible cost. That is economy. We acquire government resources at the least possible cost. That is economy. Least cost. Which one give us the lowest cost? We are talking of economy. Efficiency means that government resources, the use of government resources in a best possible way to give maximum output. The use of government resources to achieve maximum output. The use of government resources to achieve maximum output. It is called efficiency. That means we are using little input to get maximum output. We want to review whether the little resources government is using, is giving them maximum results. Maximum results. So the use of available resources to get maximum output. That is called efficiency. So what are the mandates of efficiency units? What are the mandates of efficiency units? While using efficiency, which is one of the components of value for money audit, we have different mandates of efficiency units. One of the mandates of efficiency unit is reviewing government spending pattern using data from the budget implementation report. Reviewing government spending pattern using data from the budget implementation reports. Another one, work closely with ministry and department and agency of government. Work closely with ministry, department, and agency of government to review the work and procurement process of specific expenditures line. This is one of the mandates of efficiency units. Another mandate of efficiency unit is agree to changes or process improvement to reduce wastage and make savings. Agree to changes or process improvements to reduce wastage and make savings. This is also one of the mandates of efficiency unit. Another mandate of efficiency unit is promote a change in the culture of public spending by NDA. Promote a change in the culture of public spending by NDA to ensure prudency and savings. To ensure prudency and savings. Another one is to collaborate with government institutions. To collaborate with who? Government institution whose responsibility is bearing to those units. To collaborate with government institution whose responsibility is bearing to those of the units. So this is one of the mandates of efficiency unit. So let's look at another component of value for money audit. Another component of value for money audit is called effectiveness. Effectiveness. This effectiveness means using government resources in a best possible way to achieve desired results. Using government resources in the best possible way to achieve desired objective. We are using government resources in the best possible way to achieve desired objective. It's different from efficiency. This one, in effectiveness, we want to achieve the established objective. But in efficiency, we want to achieve maximum output as much as we can achieve. Effectiveness has to do with time. You are doing the right thing at the right time. That is effectiveness. Time. Doing the right thing at the right time. That is what? Effectiveness. So this is one of the components of value for money audit. Now, what are the steps involved towards successful value for money audit? What are the steps involved toward successful value for money audit? One of the steps involved towards successful value for money audit is initial analysis of the project area. Initial analysis of the project area. You need to do analysis of the area that you want to conduct value for money audit. It is very important. Initial analysis of the project area. That is one of the important areas of value for money audits. Initial analysis of the project areas. Another one is adequate planning. Adequate planning, coordination, and control. You need to plan for the value for money audit. Hello, can you hear me?
Yes, sir.
So we are talking of steps involved in value for money audit. Initial analysis of the project area. Which area of government resources you want to audit? Which area of government activities that you want to audit? You have to state it. After that, you need to do planning. You need to do adequate planning for the value for money audit. You need to do adequate planning from the value for money audit. Once you do your planning, you now need to do the introduction of the main study area to the auditee. Those you want to audit, those organizations, those ministries that you want to audit, you need to let them know the area that you want to audit. Under the area that you want to audit, you need to tell them the purpose of the study, the time covered by the studies, the audit team member, the objective of the audit, the method that you want to use to collect data too. You need to state it in the areas. The purpose of the audit too, you need to state it in the area. And the information too, you need to state it in the area. So that is the second step. That is the third step in value for money audit. The next step in the value for money audit is carried out compliance tests. You need to carry out what is called compliance tests. Carried out what? Compliance test. Compliance test is an audit test carried out to determine whether the internal control is being applied as prescribed by the management. Compliance test is one of the audit tests carried out by an auditor to determine the strength of the internal control. We use it to determine whether the internal control is being applied by the management as prescribed. If you carry out compliance tests and the internal control is not strong, you need to go further to the next step by carrying out substantive tests. You need to go further to the next step by carrying out substantive what? Test. Substantive test is carried out. It's a detailed test of the transaction. You are not using sampling in substantive steps. You review the transaction 100%. You review all the supporting documents. You review all the payment vouchers. But in compliance test, you make use of random sampling. While in substantive tests, you do 100% review. You review every document. You do not make use of sampling. Since the result given to you by compliance test is not reliable, you may go further. You may proceed for substantive test. While doing this substantive test, you do the detailed test of the transaction and balances. You review all the documents in details. You do not leave anything behind. That is called substantive test. After you do your substantive test, you generate reports. Report writing is another step in value for money audit. Report writing. You write your audit report from the conclusion of your substantive test and compliance test. You write your audit report. Once you do that, you now follow up actions involved. Based on your audit report, there are some area of weaknesses you note in the government resources. You follow up the action. Those concerned, you ensure that they implement a policy to guide those areas to ensure that there's no weaknesses, there's no lapses in those areas. So this is one of the steps. After that is follow-up actions involved. That is one of the last steps of value for money audit. Now, what are the factors contributing to an effective value for money audit? Factor contributing to an effective value for money audit is the same factor that is contributing to an effective audit that we have mentioned earlier. Factors contributing to an effective value for money audit is the same factor that is contributing to an effective audit that we have mentioned earlier. One of these factors is called independence of the auditors. Independent of the auditor. If we want to have an effective value for money audit, the auditor must be independent. The auditor must be totally independent from the management. The auditor must not be controlled by the management. The auditor must not be controlled by the auditee. The scope of the auditor, the scope of the auditor must not be unrestricted. You must give a wider scope to the auditor. You must give wider scope to the auditor to discharge his responsibility. You must give a wider scope to the auditor to discharge his responsibility. Another one, the expertise and professionalism of the auditor. The level of training, knowledge, and professionalism of the auditor also will determine whether we are going to have an effective audit or not. We have another one called the resources at the auditor's disposal. The resources at the auditor's disposal, these also will contribute to an effective this one will also contribute to an effective value for money audit. It also contribute to an effective value for money audit. Unrestricted access to records too will contribute to an effective value for money audit. Stakeholder support too will also contribute to an effective value for money audit. So these are the factors contributing to an effective value for money audit. Now, what are the role of internal auditor units in relation to value for money audit? What are the role of internal audit units in relation to value for money audit? Internal audit unit, they have a key role to perform as per value for money audit. One of the roles that they need to perform that relate to value for money audit is to guide against extravagant expenditures or unreasonable expenditures. Another one is to ensure that sufficient fund is available to enable payments. To ensure that sufficient fund is available to enable what? Payments. Another one is to ensure compliance with budget and civil service rule. Another role of internal audit in relation to value for money audit is to ensure compliance with budget and civil service rule. To ensure compliance with budget and civil service rules. While another role is to ensure that goods and services comply with prescribed standard before payment. To ensure that goods and services comply with prescribed what? Standard before payments. These are all the role of internal audit in the value for money audit. So, ladies and gentlemen, like I said, I'm going to do 1 hour's class today. I'm very sorry. I have an assignment to do. An official assignment I have to attend by 9 o'clock. So I'm very sorry. That is the reason why I held a lecture yesterday night. But I promise you, every Friday, we'll be holding 1 hour's lecture. And every Saturday, our 2 hours lecture still remains the same as from next week. So please take note. There will be lecture on Friday, public sector accounting and finance. Friday, 8:30 to 9:30, just 1 hour's lecture. And our lecture on Saturday still remain. It's for 2 hours. I'm just spending 1 hour today because I have an assignment to do. So I'm very sorry. So by our Friday lecture, we will continue with the public sector audit. We will continue from internal audit. We will look at what is internal audit, what are the scope of internal audit, what is the responsibility of an internal auditors. So what are the type of internal auditors, internal audit? What are the factors that must be considered before carrying out internal audit work? We are going to look at that by next week. So thank you for having me. Have a nice day.
Please help us send the material, sir.
Okay, I will do that. I will do that.
Yes.
Yeah.